Hello Grade 12 Mindsetters, welcome to today's accounting show. Today we have a special revision lesson on interpretation of financial statements. We have selected highlights of lessons shown earlier in the term to help you revise Term 1's work. Please post all your questions and comments on our Facebook page on facebook.com/LearnExtra or on Twitter @LearnExtra so we can help you with your revision. Don't forget to download today's show notes on learn.mindset.co.za or click on the link on our Facebook page. Now it's time to get on with our lesson.
Right, let's move on now to our next adjustment, question 3. We are given again an extract of a trial balance before taking the adjustments into account. Again, the year end is the 28th of Feb 2013, and this time in our trial balance we are given sales 100,000, then we're given cost of sales 60,000, and then we have trading stock. This amount should be 25,000. Let's just add another 0. There we go. Okay, so those are the three amounts given, and then we've got our adjustments. All right, let's read the first adjustment. A dissatisfied customer was issued with a credit note. Credit note meaning they came to the business and they decided they're not happy with the stock, they want to return the item. So a dissatisfied customer was issued with a credit note for 400 Rand. The credit note was omitted, in other words, left out from the relevant journal. And then they go on to tell us the business uses a markup of 100% on cost. Okay, right, let's focus on this adjustment and let's look at how it's going to impact on our income statement. Okay, right, I'm going to extend the page a bit. We've got a return of 400 Rand. So immediately I'm going to have to cancel the sale, in other words, selling price given to me at 400 Rand. But apart from the sale, I've also got to consider the reversal for the cost of sale for this particular transaction. Okay, right, let's look at the amounts. The selling price is given to us at 400 Rand. The cost price, however, is not given to us, but instead we are given a markup percentage of 100% on cost. Okay, so using that markup percentage given to us, we can obviously work out our cost price. So let's do that quickly. Okay, so I'm taking 400 Rand times 100 divided by 100 plus markup, which is 200, to give me a cost price 200 Rand. I just want to record that. My cost price for this transaction is 200. Right, let's now focus firstly on the selling price. My selling price, the two accounts that will be affected with this return, the first account will be debtors allowance, which is an expense for the business. And the second account, credit note, clearly tells me a debtor has returned goods. So the second account will be debtors control. Okay, right, let's focus on debtors allowance. Debtors allowance will be debited. It is an expense. So debtors allowance debited with the 400 Rand. Debtors control is my asset. And my asset or my debtors are now going to owe me less because they're returning goods. So credit 400 Rand. Again, I'm focusing on an income statement, not a balance sheet. So I'm not focusing on debtors control because that's my asset, that's my balance sheet item. So the focus is on debtors allowance. How are we going to disclose this in our income statement? Debtors allowance at the end of the financial year gets closed off to sales. So if we go to sales, the figure given to us at the top, our sales for this financial year, 100,000. Okay, so in brackets, sales 100,000. I am now going to subtract my debtors allowance, which is 400 Rand, and that's going to give me the sales for this financial year after subtracting my debtors allowance or the return. Okay, that's the first part to the adjustment. Let's now focus on the cost price. For the cost price, the 200 Rand, my two accounts that are going to get affected, the first account will be cost of sales, and the second account, a customer is returning goods, a customer is returning stock. So the second account will be trading stock. Okay, right, let's start off with cost of sales first. Cost of sales is an expense, but remember, because a customer is returning goods, we've obviously cancelled the sale. We've subtracted 400 Rand from sales. So if there's no sale, there is therefore no expense incurred for this particular sale. So my cost of sales will now be credited with 200 Rand. Let's bring down the total quickly for cost of sales. I think it was 60,000 or 50,000. Let's quickly check. It was 60,000. So let's bring that down. Okay, so on the debit side, 60,000. So remember, I'm reversing a sale. I'm cancelling a sale. I've got to cancel the cost of sale as well. So cost of sales will be credited with 200 Rand. In other words, I'm going to subtract 200 Rand from my cost of sales. So let's show this in our income statement. Cost of sales, okay, in brackets, the total was 60,000, but with this adjustment, I'm going to subtract 200 Rand. Okay, right, let's now look at the second part of this adjustment. Trading stock, the total for trading stock, okay, given to us, is 25,000. So I just want to bring that down first. So on the debit side, my balance of stock, an amount of 25,000. Customer returning goods, so 200 Rand worth of stock is coming back into the business. In other words, my trading stock is now going to increase with the stock that is coming back into the shop, into the business by 200 Rand. And my new value of trading stock in my general ledger is now 25,200. Okay, now remember guys, this is obviously an asset, and this is not shown in the income statement. However, especially with trading stock, there is always an adjustment regarding trading stock deficit, which we are going to get to. Therefore, it's important for us to work out or calculate the new balance of stock being the 25,200. Okay. Right, Luni, how are we doing? Are there any questions on that particular adjustment that I've just discussed?
No, we don't have any questions yet.
We don't have any questions yet. Okay. Right, guys, let's now look at the next adjustment given to us. Due to heavy rains in February, stock with a value of 2,000 Rand was damaged. The insurance company decided to pay 50% of the loss. However, no payment has yet been received. And then they go on to tell us the bookkeeper did not make any entries for the above transactions. Okay. Right, guys, please remember, whenever you get any adjustment, make sure you understand what is happening in the adjustment itself before you attempt completing the income statement or the balance sheet. Right, now in terms of this particular adjustment, we've got stock that has been damaged. So let's just extend the page. So we've got stock with a value of 2,000 Rand that has now been damaged due to rain or due to leakage or whatever the case may be. 2,000 Rand worth of stock is now damaged. So immediately, the first account that comes into mind is trading stock. Okay, all right, if I go to the previous adjustment, my trading stock balance, 25,200, so I want to bring down that balance. 25,200. So immediately, guys, trading stock, 2,000 Rand worth of stock has been damaged, which means that stock will that damage or that loss, my trading stock is now going to decrease by 2,000 Rand. So trading stock will be credited with the 2,000 Rand. All right, let's look at the other accounts that are going to be affected with this transaction. They go on to tell us that the insurance company has agreed to pay 50% of the loss. So in other words, 50% will be received. However, the balance, which is the remaining 50%, is treated as a loss to the business. The business cannot recover this from this portion from the insurance company. All right, so let's look at firstly what the insurance company is owing the business. Because remember, according to the adjustment, the insurance company has not yet paid, or payment has not yet been received. Okay, so the second part to my adjustment, payment not yet received, is classified or regarded as accrued income. I am going to debit accrued income with 50% off 2,000, which is 1,000 Rand. Okay, now let's look at the balance. 2,000 Rand of stock has been damaged. 1,000 Rand I am going to receive from the insurance company. However, the remaining or the balance 1,000 Rand is the loss that the business has now incurred. So the 50%, the 1,000 that will be debited will be loss due to, in this case, there was a flood, or due to heavy rains, or you can call it loss of stock. Okay, so we've got loss due to floods, 1,000 Rand, accrued income, 1,000 Rand on the debit side, and the contra entry being trading stock on the credit side, our 2,000 Rand. Okay, you guys with me? I hope you are. If you don't understand anything, mindsetters, please tell Looney. Looney, I will then re-explain. Okay, right, let's take this information and let's put it into our income statement. So in my income statement, the expense that the business has incurred is loss due to floods, or let's just change that wording and let's call this loss of stock. Okay, so my loss of stock, my expense disclosed in my income statement is 1,000 Rand. Okay. Right, moving on now to the next adjustment, or the last adjustment with this particular question. A physical stock take at year end showed that the business has stock to the value of 21,200, and then this should read, this was after taking the above adjustments into account. Okay, so in other words, physical stock, when we physically counted our stock, our trading stock at the end of the year, we are getting a stock value of 21,300, and this was after taking into account the loss of stock as well as the stock that was returned by the customer, the two previous adjustments. Right, so let's look at whether the business has incurred another loss, in other words, trading stock deficit. Again, we're focusing on trading stock, the ledger account. Okay, let's just bring that up. There we go, trading stock, so that's our focus. Right, my trading stock, 25,200 minus the 2,000 Rand. So my new balance, as per my general ledger, will be 23,200 after subtracting the 2,000. The physical count of stock as per the adjustment is 21,300. Okay, so physical stock 21,300. Okay, so immediately I notice there's obviously another loss for the business. In other words, there is trading stock deficit. Let's get our calculators out. Okay, so we've got 23,200 less 21,300 and there is a deficit of 1,900. Trading stock deficit is another expense that the business needs to record in their income statement. So under operating expenses, we now have trading stock deficit, okay, and that amounts to 1,900. Okay, right, Looney, I think we should take another break.
All right, Mindsetters, I hope you guys are enjoying this revision session. Remember, if you are struggling and need help, please post your question on our Facebook page or send an email to helpdesk@learnextra.co.za. Now it's time to take a quick break, so don't go anywhere. We'll be right back. Welcome back, guys. I'm sure you've seen and heard about the Mindset Rack nomination and hope you'll get involved. If you make a video, post it on YouTube with the title #LearnExtraRack, followed by your name or the name of your group. If you don't have a video, post a photo on our Facebook page and tell us what you've done. Let's use this short holiday to make a big difference in other people's lives. Now, let's get back to revision.
What we're going to do now is going to look at one of the improve your skills questions. And this is a real question from a past paper where what we're doing is we're going to prepare a full cash flow statement. But unfortunately, we only have an hour in the show, so what we're going to do is only do the first note, which is note 1, the reconciliation note. But you can prepare the other one in your own time. The answers have been posted up on the website, so you can see how to answer this question. So here's the question, which is telling us that we've been presented with the financial information for Posh Limited, that's the name of our company, for the year ended 30th of June 2013. And you can see here that there is a long extract of balances from the trial balance. So typically the question takes this format, where you get given a whole trial balance and you have to use the information in the trial balance to prepare the full cash flow statement with some of the notes as well. Okay, and today we're only going to prepare note 1 because of time constraints. And notice as well that this question is in a bit of a different format because look, it says 3,100,100. If you see a financial statement that's presented like this, don't get a fright. It's not a comma like in mathematics where it means a decimal point. They just to separate big numbers and make them easier to read. Sometimes some financial statements will have a comma like this to separate the numbers. So this 3,100,000 is simply 3,1 million rand. Okay, so 3,100,000. So just make sure that you are aware of that. That's the way that sometimes the question is done. What we need to do now is we need to look at the various pieces of information that we have. Okay, we've got a whole long information, ordinary share capital, retained income, various things. It's a full trial balance, or at least an extract from it with most of the accounts, and we also have an income statement for the year. Remember before the break what I said, the first thing that you need to do when preparing the note, which by the way looks like this, here's the note, it says reconciliation between profit before taxation and cash generated from operations. The very first thing that you need to do when starting this note is to find your profit before tax. Remember I said that before the break. So we now have to look at the information that we've been given and we have to find somewhere our profit before tax. So if you look at all this information here, this is from the balance sheet or from the post-adjustment trial balance, but most of these items here are actually from the balance sheet. And we know that if we want a net profit number, we need to look at the income statement. So number 2 is the extract from the income statement. What they've done here is they've given us a whole lot of items, interest on loan, depreciation on vehicles, depreciation on equipment, profit after tax, and profit before tax. But unfortunately, there is a question mark here, question mark on profit before tax. So what that means is that we're going to have to calculate what the profit before tax was. The only piece of information that we've been given here is the profit after tax, which we know is 575,280. So that's the first piece of information that we have. We're not given the taxation anywhere. If you look back further up, you are given these two numbers of SARS income tax. Those two SARS income tax amounts are the balances in the SARS income tax account in the general ledger, they, remember, do not relate to my real income tax for the year. They are just our provisional tax payments, because remember, go back and revise the difference between SARS income tax and income tax. So what we're actually looking for is income tax, but it's not given to us, so we have to read a little bit further. And if you go down all the way to point 8, there we finally see it. Income tax is calculated at 28% of net profit. So we know that we're going to take our net profit, work out 28% of it and subtract it, and the answer is going to be our profit after tax. But now what we have to do is work backwards. So let me show you the trick and how you should do it. What I normally tell my learners is to write here profit before tax. Then we put taxation, and then we put profit after tax. And what you should learn to do, and this is a skill that's going to become useful in many, many different questions, you should write down the percentages that each of these represents. So what you need to remember is that profit before tax is always 100. I'm just going to write the 100 here. You'll see why in a moment. So profit before tax is 100. To work out the taxation, I'm going to work out 28% of that number. So that is 28%. Okay? And then that means that my profit after tax, if I take the 100 and subtract the 28, because remember, you always subtract your taxation from profit before tax to get profit after tax, I end up with 72. So these are the three percentages. The profit before tax is 100%. We then subtract 28%, which is our taxation, and we're left with our profit after tax, which is 72%. You may have seen this method before in grade 10 when you calculated sales and cost of sales and markups. But I'm now going to take this method and apply it to the profit before tax. What I'm going to do is insert the number that I have here, and if we look back at the information given in the question, the amount that we were given was the profit after tax of 575,280 Rand. This number here. So we're given our profit after tax. So I'm going to write it in my little table here. 575,280, just checking that it's right. 575,280. The number that I want is this X at the top here, which is the 100. Okay, so I want to know what my profit before tax is. But I've only been given my profit after tax. Now, here is the method that you should use. If you want to calculate an unknown, but you know the different percentages and how they relate to each other, what you do is you multiply by the percentage that you want, and you divide by the percentage that you have. So right now, the number that I have is 575,280. So let me write it here, 575,280. That's the number that I have. And that number represents 72%. So I have 72% of the number that I'm trying to find. So I have 72. What number am I trying to find? What number do I want? Well, I want this X here, which is 100%. So I'm going to have to multiply by 100 at the top. So what this now means is that if I want to calculate my profit before tax, I'm going to take my 575,280, which I have, and I'm going to multiply it by the percentage that I want, which is 100, and divide it by the percentage that I have, which is 72. That is going to give me my profit before tax. Mindsetters, you can also use this method if you want to calculate the tax. So suppose I want to calculate the tax instead of the profit before tax, and I'm given the same number and the same relationship between them. If instead I were to multiply by 28 over 72, that would give me my tax number. Okay, so in this example, I don't want the tax, I want the profit before tax, so I'm multiplying by 100 and dividing by 72. That will give me this number at the top, the profit before tax. In the same way, though, if I wanted my tax instead, I would multiply by 28 over 72 to give me that answer. So this is a very, very useful method. It will also come in very useful when later on you learn about VAT calculations, calculating that. It's also often used when you're calculating discounts and debtors paying and so on. So you as mindsetters need to master this method because you're going to find it very, very useful to work out percentages if you get given one number and have to work backwards. So if we now want to work out our profit before tax, let's get the calculator up. What we're going to do is just type in this little calculation onto the calculator, and it's going to be 57. I've got some calculator gremlin here at the moment. Let's try that again. 57. I'm just trying to turn off the ink layer here. Turn off the ink layer. Okay, so let's try the calculation again. It's going to be 575. Okay, let's try it again. So it's going to be 575,280. And what we're going to do is multiply it by 100 and divide by 72. This, by the way, mindsetters, is why you should, if you can, invest in a spare calculator in case one breaks when you're writing a test or doing an accounting activity. What we get is our net profit for the year is actually going to be 799,000, 799,000. Multiply by 100 and divide by 72 because you're multiplying by the number that you want and you're dividing by the percentage that you have. So if I go to the answer sheet, I'm just going to fill it in. I finally got my net profit before tax, 799. Just check what that number was again. 799 and 3 zeros. Okay, so that was quite a bit of work to get our first number that we needed, but it's worth it because we have to make sure that we get the correct net profit before tax, and usually that would be worth about 3 or 4 marks because you need to do the calculation. Now let's go to our second step. Our second step is that we have to adjust for depreciation and interest expense. And if we go back to our information, let's look up there, it gets given to us here. Depreciation is given in the income statement, and notice, mindsetters, that there are 2 of them. There's depreciation on vehicles and there is depreciation on equipment. So if we want that number, we're just going to add the 2 together. That's going to be 411,411,000 plus the 361,361,000. Remember, you want to add back your total depreciation for the year, which is going to be 772,000. So let me put it in. If I go back to the answer sheet, 772,000 was my answer for depreciation, 772,000. And we also have to add back our interest expense. Sometimes you have to do that calculation by a timeline with a loan. I'm sure you all remember how to do that. You take a loan and draw up a timeline and work out the interest for the year. But often that's also given to you. And in our question, it was given to us here as interest on loan. The number we're looking for is 468,000. So what we have to do is add that back as well. So 468,000 we write in here as the interest on the loan. Those 2 things are our 2 adjustments, and what we must do is add them up to get our operating profit before changes in working capital. So there's my 772,000. It's already in the calculator. I'm going to add the net profit before tax, which was 799,000, and I'm going to add the adjustment for interest, which is 468,000, and that gives me 203,900. 203,900. Let's write it in here. That number is called my operating profit before changes in working capital. Now, mindsetters, this part is quite important. We now have to see what are our changes in working capital. And what we have to do is look first at inventory, then at debtors, and then at creditors. So let's go back to the information that's been given to us. Notice that this question is giving me comparative figures for 2012 and 2013. That is last year 2012, this year 2013 in the question. So to work out what we've done with our inventories, we have to look at this line here, inventories. What have our inventories done this year? Let me also give you some advice. Use a ruler in an exam to be able to see the numbers quickly. So at the beginning of the year, our inventories were 546,000. At the end of the year, our inventories were 513,000. They've changed from 546 to 513. Have they increased or have they decreased? Well, if something moves from 546 to 513, it's gone down. It has decreased. So what we need to do is on the line here, we have to write the word decrease in inventory. How do we know it's a decrease? Well, we know from our information that it's gone down from 546,000 to 513,000. Now we must do the calculation. So to do the calculation, we just open it in brackets and write it in here. It was last year's number, which was 546,000, and it's now decreased to, let's check it again, it's decreased to 513,000. So let's fill those numbers in. 546,000 minus 513,000, and let's do the calculation and check to see what we get. It's going to be 546,000 minus 513,000, and the answer that we get is 33,000 Rand, and that is the number that we are going to write here, 33,000 Rand. But now, we're not done yet. What's very important now is to realize whether the sign is going to be positive or whether the sign is going to be negative. What we said earlier before the break was that if there's a decrease in inventory, it means we're selling inventory, so we are getting cash. Cash is coming in. So if there's a decrease in inventory, what that means is that this sign must be positive because it represents a cash inflow. We're going to do the same now with our debtors. So what we're going to do is check back over here and see if we can find our debtors. Here we've been given our net trade debtors. This is the second number that we're going to look at. And the number has changed from 1524 last year to 1988 this year. The number has actually got bigger, in other words, an increase from 1524 to 1988. So once again, on the answer sheet, we're going to write the word in here. It's going to be an increase. It's an increase in debtors. We're going to calculate the change in debtors by looking at the numbers 1988, 1524. Let's just compare them. 1988 with 3 zeros minus 19, sorry, let me check the number again. 1524, sorry, with 3 zeros. So 1524, 000. Let's do the calculation and fill the answer in. So it will be 1988000 minus 1524000. The answer comes to 464000. Let's write that answer in here, 464000. And now, again, we've got to get the sign right. But in this case, it was an increase in debtors. In other words, there are more people owing us money now than there were at the beginning of the year. For that to have happened, we must have lent them the money. In other words, we must have given money out of our business to lend them that money because they're going to pay us back. So what that means is that our sign here must be negative, because if our debtors have increased, we have got a cash outflow. Okay, the last thing we have to do here is look at the creditors. So our creditors are given to us here as trade creditors. Let me maybe just change the color. Trade creditors, this yellow. These trade creditors have also changed. They've changed from 1183 to 1315. 1183 to 1315 is actually going to be an increase because the number's gotten bigger. So I'm going to write over here that it is an increase in creditors. And once again, we have to do the calculation. To do the calculation, it's going to be 1315,000 minus 1183,000. Let's write in brackets 1315,000 minus 1183,000. And if we do it on the calculator, we get the answer 1315,000 minus 1183,000. The difference between these two is 132,000. So I'm going to write 132,000 in here. Now again, we have to check what has happened to the sign. If we've got an increase in creditors, what that means is that we owe more people money now than we did at the beginning of the year, or we just owe more money than we owed at the beginning of the year. So if I owe you more money at the end of the year than I did at the beginning of the year, what must have happened is that I must have borrowed money from you. I must have gotten that money that I owe you. So what you must remember with this one, this is why I've done it in a different color, this is the only one where the increase is positive and the decrease is negative. So this one we're going to leave as it is as 132,000. So that's basically the completion of note 1. You would just now have to add these three numbers together to calculate the changes in working capital, and then this plus this, in other words, your operating profit before changes in capital plus the changes in working capital is going to give your final answer, which will appear here, and that answer is going to appear on the face of the cash flow statement as your cash generated from operations.
I'm sure you've seen the walk together photo on our page. Please post a caption and like the captions that you think are best. The 3 captions with the most likes will each win a pair of tummy tackies. We'll post the winners on Friday, so get to liking and get all your friends to like too. Now it's time to take a break, so don't go away. We'll be right back. Welcome back from the break. I know you can't wait for the term to end and for the holidays to start. This year we bring you revision sessions from term 1 from the 28th of March till the 6th of April. These will be repeats of all the Learn Extra live shows from term 1. These programs will run from 9 a.m. in the morning till 7 p.m. at night. Go to our website learn.mindset.co.za for all the details. But for now, let's get back to the revision.
The question that is given to us, the information below was extracted from the financial statements of Sports Limited, distributors of various sporting equipment. Now, before we look at what is required, let's look at the information itself. Okay, let's go to the info. Right, we are given a question, the information. We're given an extract from the income statement. Then we provided with a balance sheet, and very, very important, guys, the balance sheet, I'm obviously given a balance sheet for 2008 as well as 2009. 2008 would be my previous financial year, 2009 my current financial year. Right, so given the entire balance sheet, let's move down, there we go, the entire balance sheet, and if we move on to the next page, we now have a bit of additional information as well. So I'm going to quickly read through the additional info and highlight the important aspects given to me. 206,900 shares were sold during the financial year at R6.30 each, as at 28th of Feb 2009. In other words, at the end of the current year, 417,000 shares were issued. Right, next bit of info. Earnings and dividends per share were as follows. So they've already calculated the earnings per share, EPS, for 2019 is given to me. 2008, I don't know why I'm saying 2019, it's 2009 given to me, and then 2008 as well. Then I am also given a breakdown of total dividends for the financial year. Again, total dividends will be my dividends per share. 2009, 72 cents per share. 2008, 105 cents per share. Next bit of information, C. You are also provided with the following financial indicators. So I'm given the percentage return on shareholders' equity. Then I'm given the percentage return on capital employed after tax, as well as the net asset value per share. Right, and then finally, the last bit of info, the price of the shares on the JSE has fluctuated between 680 cents and 780 cents over the past year. Okay, now guys, please remember at the start of every question, read through the entire question before you actually get started with the question itself. Right, we've done exactly that, so we're now ready to look at our questions. The first question wants us to calculate the following for 2009, and the first calculation is our current ratio. Okay, current ratio, how do we calculate current ratio? It is a grade 11 ratio. Arjun, will you help me with this?
Okay, so it'll
Current
be
ratio will be?
a ratio between the current assets and your current liabilities.
Okay, good. Current assets is being compared to current liabilities. So there we go. If we take our current assets for 2009, okay, let's just write that down. 2009 current assets, an amount of 320,000. 2009 current liability, an amount of 390,885. Let's just write down, this represents current assets, is being compared to current liabilities. Right, and the ratio that we are ending up with, 0.8 is to 1. Okay, guys, let me just quickly go to the information so you know exactly where I'm getting this amount from. Okay, it's coming from your balance sheet. So my current assets for 2009, there we go, there's my 320,000, is being compared to my current liabilities for 2009, an amount of 390,888. So that's where I'm getting my amounts from my balance sheet. So the first question, very, very straightforward, not difficult, not a difficult calculation for 3 marks. Right, let's now move on to the next calculation. The next calculation, another liquidity ratio. Calculate the asset test ratio. Arjun, I'm going to ask you to help me again with the formula.
Okay, so this will be your current assets without your inventory, which is your trading stock,
Okay, so
and
current
consumables on
assets
hand,
minus stock
to your current liabilities
is
again.
being compared to my current liabilities.
Yeah.
Okay, right, so let's look at the answer or the actual calculation itself. Current assets minus stock for 2009, an amount of 68,750. Okay, and let's go to the balance sheet so that we know exactly where we're getting this amount from. So let's go to our information. There's my balance sheet, and I'm looking for my current assets. There we go. All right, let's get our calculator out so that we can check this total. Let's try that one more time. Okay, so if I take my current assets, which is 300, okay, let's try that one more time. All right, let's try that one more time. 300, okay, not really helping me. Okay, that's fine, guys. Let me just show you the calculation. 320,000. Okay, my total current assets, and remember, I need to subtract inventory. My inventory amount, 251,250. So that gives me the first part of my calculation, an amount of 68,750. This is being compared to my current liability, which obviously remains the same, 390,885. And if I calculate the ratio, I'm getting a ratio of 0.2 is to 1. Okay. All right, let's now move on to our next ratio calculation. They now want us to calculate the net asset value per share. Now, guys, this is a new ratio. This is something that you do in grade 12, not in grade 11 or grade 10. Net asset value per share is calculated by taking your ordinary shareholders' equity, and we're going to divide this by number of shares that were issued. Okay, your answer will then be multiplied by 100 cents. In other words, your answer needs to either be in cents or you can convert this to rands. So let's look at our calculation. Okay. Abram, how are we doing there? I seem to be having a bit of
We're
difficulty
doing well.
with the
Reminds
board.
it is make sure that you have your notes, because whatever we're going over, it's on your notes. And the challenge question already it's posted on facebook.com/learnextra. Are you still enjoying yourself, Arjun?
I'm good. I'm actually enjoying this. It's a new experience. It's a great opportunity. I'm definitely enjoying this.
That's nice. And it's good that you are actually working out with us. And I
Yeah.
should say this to other matriculants just like you. The final timetable for the matriculants is out.
Oh, wow.
Okay.
I know.
Pretty.
I'll post the link on facebook.com for you to get it.
Okay.
I'm not trying to scare anyone.
No. I'm not trying to scare anyone either, but guys, you're writing accounting in that first week.
Oh, great.
So just
Thanks,
heads up
ma'am.
on that. Right, guys, let's get back into the calculation for the net asset value per share. So my calculation as follows. I'm taking my ordinary shareholders' equity. In other words, my amount from my balance sheet, 3,120,000. Let's go to the info so you know exactly where this amount is coming from. Okay, so there we go. That's my balance sheet. Equity. So your capital and reserves represents your shareholders' equity. And remember, guys, let's get a pen out. There's my 3,120,000. So this amount is now taken to my answer sheet. Let's go back to your answer sheet. 3,120,000. This now must be divided by the number of shares issued. So if we go back to our information, additional information A, we were told as at the 28th of February 2009, 417,000 shares were issued. So that is where I'm getting my figure from, 470,000. So back to my answer sheet, 3,120,000 divided by the number of shares issued, 417,000. Multiply this by 100 cents, and you're going to end up with a net asset value per share of 748 cents or 7 Rand 48 cents. Now, what do we mean by net asset value? An absolutely important ratio, guys. Net asset value tells you the worth of your shares. So in other words, if as a shareholder I want to sell my shares, I need to sell it at what the shares are worth. So currently the shares for this company are worth 7 Rand 48 cents. Okay, hope you guys are with me. Abram, are there any questions on any of the calculations so far?
Not on the calculations, rather. I have a question on based on what you started with, asking how do we comment on ratios?
Okay, how do we comment? We're coming to that. So I think let's look at the comments when we get to it, and then I'll obviously explain that in detail.
No problem.
Okay, brilliant. Right, the last calculation guy is our guys. Okay, let's do that again. The last calculation. Right, we're having too much of fun in the studio. I need to now focus. The last calculation is your debt equity ratio. In other words, your gearing ratio. Now, in this particular calculation, we're going to be comparing your non-current liability, your long-term loans, are being compared to equity. In other words, your own capital. So we are looking at borrowed capital versus own capital. Does the business rely too much on borrowed capital? So let's start off with equity. We came across this figure in the previous calculation. Your shareholders' equity for 2009 is an amount of 3,120,000. Okay, remember guys, again, we're getting that from the balance sheet. Let's now look at our non-current liabilities for the year. So let's go to our information. Let's go back to that balance sheet. There we go. Right, in our balance sheet, your non-current liabilities, and for the year 2009, our non-current liability, an amount of 300,000. So let's take that through to the calculation. Okay. An amount of 300,000. Right, now remember guys, in accounting, whenever you're doing any ratio calculation, the right-hand side must always equal to 1. So I'm going to divide 3,120,000 on the right-hand side in order for me to get 1. On the left-hand side, I do the exact same. So 300,000 divided by 3,120,000. Okay, let's just hope our calculator is working. Arjun, if it's not working, I'm going to ask you to help
Alright.
me, okay? All right, so we've got...
Okay, while Mesh is trying to get that mindset, I should keep on telling you this. The challenge question is on facebook.com, and I'm not seeing anyone who's giving us the answers. I hope you're working on it. If you have your answers already, post them on the same post on facebook.com/LearnExtra. Arjun, are you getting your answers right there?
It looks so. It looks like it. I'm definitely working with ma'am, so I know that I can do the calculations, and looks like I'm getting them right.
All right, awesome.
Right, we got the calculator to work. So guys, all I've done is I've taken my 300,000 divided by 3,120,000 to get 0, comma, if I round up, 0, comma 1 is to 1. So let's just fill that in. 0, comma 1 is to 1 is my debt equity ratio for this financial year. Right, let's now move on to the next part of the question. We require to explain why the directors decided to reduce the long-term loan significantly during the current financial year. Okay, so that's the first part of the question. The second part, in your opinion, was this a wise decision? In other words, they're asking us for a yes or no answer. Explain quoting evidence or figures, financial indicators from the question itself. Okay, so all of this, guys, for 6 marks. Now remember, when you get this type of question, this is where you need to comment, and this is where you need to read the question very, very carefully. So the first part of the question, explain why the directors decided to reduce the long-term loan significantly during the current financial year. So if I go to my information, I'm looking at my non-current liabilities. 2008, my loan was sitting at 1,525,000. 2009, this has dropped significantly to 300,000. So the question is asking you, why have they decided to reduce their loan? In other words, to pay off such a substantial amount. Right, let's go to possible reasons. And for that, I'm going to look at certain financial indicators. Let's go to our info. Okay, right. I'm going to start off with something that most of us are familiar with, because it is a calculation that we did do in grade 11. My return on capital employed for the year 2008 is sitting at an amount of 10%. In other words, the capital that I've used from shareholders as well as for the loan itself, my return, the return that the business has achieved is 10%. Now remember guys, if you borrow capital, capital obviously is not lent to anyone without them getting anything back. And if you borrow capital from the bank, what do you have to pay back every month? Arjun?
Interest.
You've got to pay back interest. So let's compare the return to the interest that is being charged on the loan. So if we go to our balance sheet, again, we're looking at our non-current liability. We've got a loan, and the interest that is being charged is 15%. Okay, so hang on. I'm only getting a return of 10%, but I'm paying back interest of 15%. Does it make sense to actually borrow money? Okay, what do you think, Arjun?
Well, based on the return, definitely not, because you're paying out more than what you actually received. So you're in effect incurring an expense greater than what you should.
Okay, so in other words, exactly. So my return is only 10%, but I'm obviously paying back 15%. It's not worth me borrowing this capital, and I need to pay it off as soon as possible. So let's look at possible reasons, apart from the one that I've just mentioned. Okay, so let's look at this. Right, so firstly, the reason as to why the directors decided to pay back their loan. In the previous year, the return on total capital employed was 10%, and it was lower than the interest rate, which is 15%. Okay, another possible reason, guys. In the previous year, the company was highly geared with a very high debt-equity ratio. So if we look at, and remember, you don't have to calculate the previous year's debt-equity ratio. All we've got to do is, let's just find the balance sheet. So if we compare 2009, let's just try to get a different color pen there. 2009, my equity, 1,443,000, compared to your debt, 1,525,000. So immediately we can see that the business or the ratio was greater than 1:1. In other words, this company was high risk. They were very high geared. They relied too much on borrowed capital. So therefore, it makes sense for the directors to decide in the 2009 financial year, let's now pay off this loan, or let's pay back a significant portion of this loan.
We've come to the end of our show. Thank you so much, Mindsetters, for joining me and for chatting to me during the show. Remember to visit our website, learn.mindset.co.za, to get your notes and to watch the videos from the term. Goodbye.